Hi there, welcome to kneppyinvests. Another trading week done and dusted, and it looked like it was going to be a really bad day for the ASX, and not nowhere near as bad as what maybe we were thinking at the start of the trading day, particularly because of what happened on the American markets overnight. And I'll talk about that in a second. Now, the rest of this video is going to be improvised. I have no idea what I'm going to be talking about because I have not done any preparation. I have not looked at anything. In fact, I actually did record another video before this one that was titled, Is Wagner's Good Value? And then I thought instead of preparing a video, I would just do this blindly. So hopefully this goes okay. And typically before yesterday's video, yesterday's ASX Study Rundown, I did no preparation. So to be honest with you, it should go fine. Anyway, before we have a look at what happened on the ASX today, let's have a look to see what happened on the NASDAQ overnight. And it was really interesting, to be honest with you. So this is the XGO 1 minute. But if we have a look at the NASDAQ 1 minute, and this actually goes back just before trading began. Now, I woke up at about 1 a.m. just to see how the market was performing, but more importantly, just to see if two of my bids for companies were hit. One of them was not. Actually, both of them were not. And then I had a look at the Nasdaq, and I saw it was up 1%. I went, okay, that's fine. And yes, the Nasdaq opened up 1% and stayed above 1% for much of the morning until about 3:40 p.m. Brisbane time, so about 4:40 p.m. Sydney time, and that was just about 2.5 hours before the markets closed. So right about here is about about right there is 4 a.m. Brisbane time, 5 a.m. Sydney time. And then the market completely sold off. In fact, the NASDAQ went from being up 1% to being down 1.55%. So I woke up about 4:30. I got a notification that one of my bids was hit. The other one was not hit. Can you believe it? And then I looked at the NASDAQ and I was like, why is the NASDAQ down so much? It was up 1%. And I just thought something must have happened in that 2-3 hour period. But you could just see it wasn't a sudden drop. It just sort of rolled over and then panic set in and it just collapsed. So I actually did go online, went to Twitter, went to different websites, and I was trying to find why the NASDAQ was down. Now, it might be in TradingView. US stocks stank. As discretion may be the better part of value, that tells me nothing. Here's an interesting one. Wall Street set for a high open as recent data bolsters rate cuts. Hopes. I'm trying to see if there was another article from in TradingView. It looks like they got rid of it. And it's understandable why they would have got rid of that article because it said in this article, and that article was released at about 3 a.m. local time. In that article, it says NASDAQ in the American market set to close at an all-time high. And that was made redundant within about an hour of that release. So I actually did have a read of that article. And then I had a read of some other articles trying to understand why the market fell off a cliff during the last 2 hours. And a lot of different reasons were put forth. Increase in or escalation in tensions in the Middle East. And then now you said something about Iran, but that could explain why oil prices ran hard, but maybe not really why the American markets sold off. March job reports are going to be released tomorrow, and I think their expectations are it's going to be a really good report in terms of creation of jobs, and the market doesn't really like that because the market wants interest rates to be cut, and for interest rates to be cut, we need not really good jobs report, which is sort of what's a good word? It's weird to say that we need weak economy for the market to get excited. It should be the complete opposite. And I've discussed this in the past that people believe there's a negative correlation between interest rates and the stock market. That's not absolutely true. In fact, when we see the greatest decrease in interest rates, that usually coincides with bear markets. And when we see interest rates rising, that usually coincides with bull markets. And it makes sense. When interest rates are rising, it means the economy is full steam ahead. The economy is doing great. And when interest rates are dropping, usually the Feds or the Reserve Banks do that when the economy is struggling. Hence, we're in a bear market. that sort of thing. And I've done this before. I've shown you that correlation in the past. So it doesn't always work out that when interest rates rise, it's bad for the stock market, or when interest rates fall, it's good for the stock market. But it seems like the market is obsessed with interest rates right now. So a really good jobs report would be bad for the possibility of interest rates cuts in the near future. And then one of the Fed officials said, if I remember this correctly, he thinks that there is a lower chance for interest rates cuts this year, particularly if inflation doesn't fall much further. And there's a possibility that that could be the reason why the markets sort of fell during the last 2 hours of trading. I don't know why. Let's have a look at this US stocks tank as discretion may be the better part of value. Let's see if this explains it. More than likely, here it is. The Fed Bank President Neil Kashkari said that at the US central bank's meeting last month, he penciled in 2 rate cuts this year, but that if inflation continues to stall, none may be required this year. And then they also mentioned here, add in anxiety over the coming release of the March jobs report, not that it might be bad, that it might be good, and ongoing Middle East tensions, oil futures, and the combined weight of all these factors, along with overbought levels on the weekly charts, may have led to the market to conclude discretion was a better part of value. And I have a feeling we're going to see a pretty good day on the American markets overnight, just based off what we saw on the Australian markets today. I expected a pretty nasty sell-off, and we did not see that at all. XGO only down 0.56%. Small ords down about 1%, all tech down 1.3%. Now, this is understandable because when I went to my superhero account, which is apart from my super with net wealth, this is my biggest trading platform, it was only down 0.18%, which surprised me. And then I went through all the companies, and there was quite a few companies that are in the green. And some of these companies were up pretty big, including Fisher & Paykel. I did not expect Fisher & Paykel to be up. It was up about 3%. 1.93%. So there's a little bit of sell-off closing auction. And even Ramsay Healthcare was up last time I looked, and it was down a little bit. So a little bit of sell-off during the closing auction for both of these companies. But I was thinking maybe that could have been good for healthcare. Maybe that was a sign that healthcare had a good day, and some of my other mining companies had a good day today as well. So maybe materials and healthcare lifted the ASX today. So let's have a look at how the different sectors performed today. And no, okay, I'm a liar. No, we're not a liar. I was sort of misled. All sectors down today. The better performing sectors were energies, utilities, financials. Healthcare was not that good, and materials not that good as either. Healthcare down 0.63%, materials down 0.8%. Gold had a good day though, so I did have some good performers in the gold. Well, some of my gold companies did perform well today, and that was up 0.13%. And I probably would assume that was the only indice that was up today on the ASX. So not the worst day on the ASX. I actually did expect us to be down about 1.5%. So a better than expected day for the Australian market. Okay, let's have a look at some announcements. Now, I did have a look at all announcements that were released to about 1:53 p.m. And then I went and did other stuff. And I think the main reason I looked at that announcement was 360 had a response to ASX query letter. That did interest me for a little bit, but it was only for a little bit, not for a long bit. There's no saying. There's no alternative to little bit. There's no little bit, moderate bit, or long bit. It's just a little bit. Okay, let's go back to the start of the day. Okay, so there were a few interesting announcements, a little bit different than yesterday. Yesterday was the most boring day ever. So Mount Gibson on track for financial year 24 shipping guidance. That should have caused any sort of reaction, up 5.81%. Okay. West African Resources, March quarter production update, down a little bit, but it was up for most of the day. But the share price of West African Resources has been on a tear. We have to get rid of this article. Now let's have a look at West African Resources. The share price of this company has been on a tear, and I fully expected some sort of consolidation. And if you just compare to the old highs we have seen, sort of in a resistance area at around about $1.30, which is understandable. And Mount Gibson, should probably show you Mount Gibson as well, since I've already talked about it slightly. Complete opposite. Mount Gibson has been dropping. And I was holding Mount Gibson. I bought into Mount Gibson back in October. Share price rallied, and I just saw weakness in the iron ore prices. So I sold out of Mount Gibson, and I'm lucky I did. Maybe not lucky. That was probably a good decision to sell out of my Mount Gibson. I also sold out of Phoenix, and last time I looked, Phoenix was actually up. Yeah, it's up. So I sold out about 24 and a half cents, now 26 and a half cents. So it's actually doing the complete opposite of what iron ore is doing, which is interesting. Now back to announcements. So West African, Mount Gibson, no massive reaction. So I'm looking for any sort of breakout. Capricorn metals, quarterly production update, down 5.5%. So obviously this was negative. The market didn't like this particular announcement from Capricorn metals. So this won't be a breakout, but is it an overreaction from the market? Probably not. Or this could be buy the dip situation for Capricorn metals. In fact, the chart did look good just before this. And the share price of Capricorn metals is now back in a resistance zone, or you might say a support zone now, because that resistance zone turned to support once it was broken. So after a period where Capricorn metal share price was just consolidating and going sideways, we have seen a potential breakout. But this particular announcement or production update might have put a little bit more negative sentiment within this company, and that's why the share price down 5.5%, which was a little bit different than the gold indice and other gold companies. GQG, funds under management, as of 31st of March. This did look positive. So a nice increase, but then again, this company or this fund manager has been impressive with its funds under management. There was a couple of interesting things in here. This second paragraph, right, I'm sort of highlighting right now. While we have demonstrated a solid start to 2024, net flows in the first quarter of any given year are influenced by seasonality, and we caution against simple extrapolation. So really interesting that they put that in there, and I actually do like that. So let's see, and everything's up. Funds under management's up, everything's up, inflows, that sort of thing. Do they mention inflows at all here? They just mentioned funds under management. No flows. So funds under management increase and flows in or out are different. Anyway, so let's have a look to see whether the market liked it. Yeah, market liked it, up 4.1%, particularly when the overall market was there. So let's have a look at GQG. I really have a hard time saying that. And I do know the share price of this company was in an uptrend, a new, beautiful looking uptrend. Looked like it was stalling, going sideways, and really want to see the share price get above this level. We'll put a line right there at $2.30, and we're at $2.29 right now. So this is almost a breakout. I could buy some shares in this company if it gets above $2.30. Now, another fund manager also released their funds under management, Magellan Financial Group. This was not quite as positive, let me tell you that, but I probably wasn't or wouldn't be expecting as positive an announcement from this company. So if Magellan Financial Group released an announcement where they, instead of experiencing net outflows, they were experiencing net inflows, I think the market would be absolutely thrilled. Funds under management increase. So again, fund increase or decrease in funds under management is not indicating that there is a net outflow or a net inflow. And this is a perfect example. Total funds under management increased from 37.2 billion to 37.3 billion. However, just under that, you'll see in the commentary, Magellan experienced net outflows of 0.7 billion, net retail outflows of 0.2 billion, and net institutional outflows of 0.5 billion. So even though funds under management increased, the company's still experiencing net outflows. So that's just the reason total funds under management increase is because this company had a pretty good quarter in terms of the funds they are managing. They all increased in value. Anyway, so let's have a look to see how the market responded. I actually don't know at this point in time. I would expect share price to be down 2%. 3.65%. Yeah. Okay. So I'm in trading in this company right now. And this, to be fair with you, could be a sales signal. I was hoping it would be would have been a better. Why did that not go through? I'm pretty sure I put it in. This could be a sell. Yep. Oh, it's right on my sell the price. So I'm selling this at about $9.48. Share price now $9.49. This could be a sell when the share price closes on Monday. And yeah, there we go. Well, this could be just buy the dip opportunity. So if I start to see the share price go higher and get above $10.40, that would be good moving forward for Magellan. But I wish this was a better report and the share price took off. That would be much better than the share price falling about 3.65%. So I wish GQG and Magellan Financial Group had each other's report, because I'm not a shareholder of the other company. Anyway, just being selfish. Anyway, let's have a look. So yeah, some more interesting announcements today, but was that it? I have a feeling that could have been it, that I remember. Biotron, positive outcomes in BIT225 phase 2 clinical trial in HIV. The very fact that they said positive outcomes makes me think the share price might have rallied, let's say 20% up. 9.33%. Oh, it's up much higher. Okay, this is an interesting one. So it was up a fair bit on open, and then there's a bit of sell-off. So let me ask you a question. Why was there sell-off in Biotron today? And just by looking at the chart, why indeed? Okay, for those who don't know the answer to this, pretty good volume coming in today. For those who don't know the answer, I'm just going to put a line there. Put it there. I'll put another line right there. Okay, so between September and February, so we're talking about a 5-month period, many investors or many shareholders bought at higher prices than what the share price was over the previous 2 months. So many shareholders bought between about 9 cents and 12 cents. They saw the share price fall to 7 cents and they said, this is a dog stock. I have to get out. Whatever happens, I am going to get out when the share price of this company goes back up to the level I bought. So today the share price of Biotron opened up at 11 cents. So what happened? Immediately there was selling pressure and there wasn't enough demand. There was just too much supply of shares in the market because all that resistance, and that's resistance. All those shareholders who bought at high prices are resistance. If the share price didn't get to those levels in the past, during that period, if the share price went up on a nice orderly fashion, sort of following the moving or follow this blue line, this could have been an amazing breakout, but it didn't because of the resistance of all these shareholders who bought at higher prices. And you probably can see that just in the 1-minute chart. You would have seen a pretty good sell-off straight away. So retail investors saw this announcement, they might have got a little bit excited, and you can just see the massive decrease in volume. That means there's way less demand for shares, and there was just too much supply, and that's why the share price absolutely collapsed during the day for Biotron. Sorry, Biotron. This could have been a breakout if you didn't see the share price increase significantly in September of last year. Anyway, Biotron. Oh, Somnomed. This is an interesting one. So Somnomed update on voluntary suspension and financial year 24 earnings guidance. Exactly what I want to see in an announcement. So I opened this up and I was disappointed. Not because it was a negative tradings update or something. It was because there was no guidance in here. It was just, we want our shares to remain in suspension. And this actually announcement triggered a memory that they released this particular announcement. They were going to change earning guidance quite a few days ago. In fact, on the 27th of March. And then on 2nd of April, they went into suspension. And still they're yet to release their trading update. And the reason behind that is they're doing a capital raising. So they're doing a capital raising and releasing a revised financial year 24 guidance on Tuesday, 9th of April. I am expecting this to be a really negative update. And I am expecting the share price of Somnomed to absolutely collapse. Current share price of this company is 38 cents, market cap 41.8 million. And an interesting story about Somnomed and Pro Medicus. So let's have a look at the weekly chart. So back in about 2012, 2013, I did a little bit of research on Somnomed and Promedicus. At the time, both companies had fairly similar markups. And at the time, because I did sort of like a concurrent evaluation of both companies, I decided not to invest in either companies. And then I have followed the fortunes of both companies since. So the markup of Somnomed now is 41.8 million. Just a reminder, both companies had a fairly similar markup back in 2013 whenever I did that evaluation of both companies. So Somnomed has now a markup of 41.8 million. Promedicus has a markup 10 billion. Yeah, 10.6 billion. So just look at the massive difference in fortunes for both companies. I just wish I had a time machine and go back to 2013 and just decide, well, Pro Medicus looks like a really good company, but that's just before. So share price of Pro Medicus back then, you can see it wasn't really taking off. Didn't really take off till late 2013, early 2014, and share price was about 40 cents back then. Now it's $104.98. So, yeah, in hindsight, Pro Medicus was an obvious buy, but I think I just didn't see the potential in Pro Medicus at that point in time. And then I didn't have another look at Pro Medicus for quite a few years after that. So it was just bad timing on my part. If I did a research on Pro Medicus in 2015, I probably would have got a little bit of a different answer than what I did back in 2013. Anyway, so Somnomed, I'm looking forward to that announcement on April the 9th, just to see how bad it is. And I think other than that, there wasn't anything of interest. There was this operational financial update from a company called Venera. I had a look at that, but I had no interest in that particular update. TLX Pharmaceuticals had their general meeting today. Ooh, share price rally. Maybe that's another reason why healthcare. No, healthcare didn't have a great day. St. Barbara, Q3 production up 33%. I reckon the share price might have rallied. Yep, 7.9%. Let's have a look at Santa Barbara, or whatever it's called. SBM. And this is the weekly chart. And this is an ugly, ugly weekly chart. Share price as high as $5.20 in 2019. Now it's 20.5 cents. But you might get a different perspective if we look at the daily chart. Is this a breakout for St. Barbara? Not quite. I won't call it just yet because the share price was at similar levels, 20 cents back in January, or between about October and January. I need to see the share price get above about 23 cents for me to think this might be a breakout, but possibly an interesting announcement for St. Barbara. So I might put this on my daily watch list, just to have a look at the fortunes in this company over the next few weeks. Is that it for announcements today? I have a feeling yes. Company appointment of voluntary administrations for Galena Mining. Life 360 response to ASX query letter. Don't think there'll be much. Yeah, not much. I looked at it, opened it up, and went, nah, whatever. And Percy Smiting and 14 degrees trading hold. Don't care about that. So let's have a look at the best performing companies today and the worst performing companies, starting with the best performing companies. Regenius up 160%. So I missed that one. I did see it here. Regenius, Cambium Bio raises 3.48 million in strategic placement. Regenius, the market loved this one. Let's have a look at Regenius. This is not a breakout. I'm not going to invest in this. No, it's not. It was a really big increase in share price, but look at the chart. It's an ugly, ugly looking chart. So I'm not really going to pay attention to that. Hastings Technology Metals. Is this a new IPO? Hastings Technology Metal. No, it's not. Not sure why that says ETF. Anyway, it's low turnover anyway, so I'm going to ignore that one. Anything else here? Nothing of significant interest. Nirada's here again. They released a really good announcement quite a few days ago. Still looks like there might be interest in this company, Nirada. Just look at the chart. Yeah, it's still interest in this company. So I'd still say there's day traders playing with Nirada. And it bounced off the shorter term moving average. I'm starting to see that a lot. So I'm looking for patterns. So pattern recognition is very important. And I am seeing company share price bounce off the short-term moving average like Narada just did right now. Didn't quite touch it, but it's bouncing off it. Okay, so that could be interesting, some sort of interesting research to do in the future. And nothing else of interest. Let's look at by market cap. St. Barbara, nothing of interest here. Image Resources, Brookside has another good day. Atlas Pearls had a good day, but nothing of interest when it comes to top gainers. Let's have a look at the top losers. Any interest here? Nothing. Vonix. Let's have a look by market cap. Champion Iron, Westgold had another bad day. Let's have a look. Westgold, they had a good day. Was it yesterday or the day before? So they had a good day the other day. And 2 bad days out of 3. But the chart doesn't look absolutely awful for Westgold. But based off their announcement the other day, I probably wouldn't be investing in that company. Vulcan, bad. Let's have a look at Vulcan. Because there was some interest in Vulcan the other day, maybe the other week. It looked like it was breaking out, and yeah, this chart looks horrible. In fact, so that was a false breakout. Too much interest. I wouldn't be trading that at all. And yeah, for those who did trade it, it's an ugly looking chart. Share price keeps on falling. And Biome is interesting because they released that positive announcement that's saying that they are operating cash flow or free cash flow positive. But I have seen Bio go down. Yeah, Bio's gone down from about 42 cents to 35.5 cents. Possible buy the situation for Biome for those who like that company. And anything else here? No, and no. So let's have a look at some charts. Let's go back to I put a company onto my buy USA chart, and that's Levi Jeans or Levi Strauss, I think they're called. So they did release their results, quarter results, and the share price did pop up 12%. And this could be a breakout. This could be the definition of a breakout. So if you look at the daily chart, last time the share price was this high was way back in February of 2022. So a 2-year high for Levi Strauss. High volume coming in. So that's why I put onto my buy USA. It doesn't necessarily mean I will buy straight away. I might just wait. Sort of like Dell. Remember I said I had 2 bids in. One of them was for Dell. Not Dell. And remember I just also mentioned sometimes I've seen a pattern where share price pulls back to the short-term moving average channel and then takes off. This is an example. So the company released some good results on the 1st of March. Share price pulled back to $104, and it didn't quite touch the shorter-term moving average, and then it's taken off again. And the other company was Ford. I bought shares in Ford. I'm a Ford shareholder right now. Can you believe that? And this is why, because the share price looks like it might be breaking out. Share price at about a 9-month high. A small position. And yeah, quite a few companies in my buy USA, in my buy Australian. These are companies I really follow closely. I did put on a possible buy, I put Enero, which is not here. Maybe I should add Enero. So I put Enero, Gin, Kogan, Codan, Orica, and Universal Brands. And I actually put Sell, Fisher & Paykel, Duratec, and Ramsay Healthcare. So I made this list a few days ago, and I sold out of Duratec. I'm hoping Duratec has gone down today. Yep, down. Okay. And I'm hoping Megaport's gone down. Yep, down a little bit. Not a lot. Anyway, so I'm looking for any sort of interesting Universal Brands or stores, what it's called, keeps going up. This chart looks pretty good. I was almost going to buy at $5. I should have bought on the breakout, which was the 22nd of February, when they released the results. Share price then went sideways for 6 trading days at $4.60. Perfect time to buy because there was no selling. So I missed that one with Universal Stores, and I almost bought Jumbo because of that pullback. So I was talking about that pullback to that short-term moving average, but this looked a little bit weaker. So moved right into that short-term moving average, and we didn't see a bounce. What's another one where we did see a pullback? No, it wasn't Orica. It hasn't pulled back at all. Was it an arrow? No, Nero's pulled back from the breakout level, which was $1.85 or so. It's pulled right back, in fact. Okay, so let's have a look at a few of my short-term positions or my trading positions just to see if any have hit my, well, based off the first 4 companies, 4 of them are up. So Service Stream had a good day. So definitely not. It's bounced off my sell position. Hub, slight drop. Nope. Elders had a good day today. And now that looks pretty good. I was getting a little bit nervous a few weeks ago with Elders. It got very close to my sell position at $8.60, but it's run hard. And Bravura had a nice day today as well. And this one could be buy the dip, moving into the short-term moving average channel. And now, hopefully, we'll see the share price take off for Bravura and Cobra. Hips going up. Otherwise, yeah, a lot of red. A lot of other companies were down. Pexar, I think this could be a sell because it had a bad day today, but I want to see it bounce. It just bounced slightly off my sell position. So Pexar could be a sell. Fish and Paykel was a sell, very close to sell, and it's run hard today. So I'm going to go through this list and see if there's any other sells that have come because of the trading today. Oh, A2 Milk was another one. Getting close to sell point, not quite. All right, and that's all I have for today's video because it's getting close to 4 p.m. And if you have any thoughts, any questions, just leave your questions in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye. Have a good weekend.